Well, good afternoon, everyone. Happy New Year to everybody. I indeed appreciate the opportunity to speak to you all at this wonderful event today. I know Murad gave us some pretty eye-opening opportunities for the pulse industry as we go forward in the years ahead. I want to talk a little bit about some of the conditions that are facing this industry as we're looking at today's world. And while not directly affected the pulse sector per se today, certainly something that's affecting the grain markets overall right now is conditions that are going on in South America. We're in the midst of a weather market right now in South America. And there are certainly the dry conditions in northern Argentina, southern Brazil that have captured the market's attention, influencing the larger macro crops like soybeans and corn and such. And that has a spillover impact as it pertains to a lot of the different commodities that we produce. So we're in a weather market right now. We're probably in the midst, I think, right now of one of the most significant weeks of the year. We have the USDA report on Thursday. It's the most significant data release that we see for agriculture in the United States, and it's going to affect all our marketplaces. So these are things that are at play at the moment. As it pertains to the pea market, production last year is certainly down considerably rather to where we were in the past number of years. That has certainly influenced the marketplace and given us good pricing opportunities, certainly since the summertime into the fall season. But I start to wonder sometimes on how long it takes before this is fully factored into the marketplace. You know, the trade and farmers and the industry has been talking about a short pea crop this year for a long time, and it's elevated the market into the 8s and as high as into the $9 a bushel territory before we backed off recently. And there's some expectation that there's a concern that maybe the statistics that are officially presented by Stat Canada right now for what that pea crop really is it being understated because a market that has slowed down in its upward momentum? Perhaps there's some element to that. So right now we're operating on the basis of a 2.1 million ton crop, and we look at our ending stock expectations for this year are extraordinarily low. We have a very tight scenario from our Canadian perspective. I have it right now pegged at about 200,000 tons. And I've kind of arbitrarily picked that as a number right now because effectively that is zero. At that point, we've reached the bottom of the barrel when it becomes our overall supply of feed product, our edible pea product in Canada. So, you know, there is that element right now of the tight inventory. It has given us upward momentum in prices during the course of 2011, but it's certainly not the only issue that's affecting our prices overall. We look forward into what's going to be happening for this next marketing year in 2012. We have a lot of challenges ahead. Certainly weather is going to be one of them. And conditions already from September to the current time now is looking pretty dry across most areas of the prairies. This is not so much a market issue at this present time, but if circumstances don't improve by the time we get closer to seeding, obviously it's going to start gaining more and more attention. Now, the other side of the equation, we understand a lot about our supply scenario, but of course we still have to have faith in what those actual production numbers are, and some people are starting to question whether as low as they are, maybe they're a little bit higher than what's being projected so far. But we got to look at the demand side of this marketplace as well. And I got this graphic, it almost looks on the backward side, I got 2011-12, where we see the movement of pea exports so far this year, less than the record pace that we saw last year, but still at a fairly aggressive pace relative to years in the past. But our export movement has started to slow down. We had a very aggressive program earlier on the year, a lot of forward contracting for fall shipment that had been put in place. Our vessel loading lineup for January is slowed down rather considerably relative to what we saw last year. So we're looking at it from the perspective of what our export markets are going to be doing as we're moving forward. Yellow pea prices, FOB Vancouver price. Again, you see the massive spike that we saw in 2008, followed by the collapse as we saw in all ag markets during that period. But a steady progression as we got through the last half of 2010 into 2011 into what price levels were the second highest that we've seen in the history of this business. And I'll have to say that I was pretty aggressive this year on marketing on a number of different commodities, including the edible peas, and started forward pricing around the August time period, and was looking at the rally that got us, Saskatchewan bids into the upper $8s and $9 a bushel, and finished them completely through the fall period. By the end of November, I was 100% done. And looking at the prospects going forward. Part of that has to do with where our export destinations are. And you can see in the yellow bars on the graphics here, representation of what the Asian market is for us. And obviously a significant portion of that is India. India makes up right now about 50% of our exports. And Murad is absolutely correct, and I can't agree with him more. Be able to develop a domestic processing sector of secondary processing to feed other regions of the world would be a great accomplishment, and I'm hoping we're working towards that direction. But the real world of today is this is where our marketplace is, and it's something that can't be denied. And India was a huge export market for us last year. We exported maybe 3 million tons. They took 1.7 million tons of our supply. This year we may export, because of diminished availability right now for one reason, we may export maybe 2.3 million tons, and India may account for about 1.1 million tons of that export market. But they have slowed down, and we've seen some relaxation in terms of the aggressiveness that the Indian subcontinent is of taking Canadian peas at this point in time. And there's probably a couple of reasons for that. Last year they produced a very large pulse crop overall. They just finished wrapping up their Harif growing season. Harvest is probably just about finished up with their pigeon peas and mung beans and such. I think there's a perception in the international market right now that international supplies of a lot of these pulses, particularly on lentils, but also on peas, is of reasonable availability. And probably the thing that does not get talked about enough, and is one of the key issues that I think is slowing down the process of demand right now, is the availability of credit, especially amongst a lot of the smaller end users and such in the Indian market, who rely on European banks to do a lot of the financing of the purchases that they do. Credit availability has started to tighten up. And this is all part of a much larger macroeconomic condition that is affecting the global marketplace right now, as we've tried to move out of recession in a lot of parts of the world, but it's very slow progress in terms of economic development globally as we're trying to pull out of recession. And currency-related issues, as India's currency has suffered fairly greatly relative to other currencies, such as the Canadian dollar and the U.S. dollar. So here's again the graphic. When we focus specifically on Asia, you could see how big a market India is of that, and China certainly is important too, as Murad said, about 500,000 tons we send there. And well over 1 million, getting closer to 2 million last year in terms for India. This year it's probably going to be around the 1 million area, maybe just a bit more. Now, the focus on India has been, I'll start with this. This is a graphic of India moisture received during the course of since the beginning of October. And there had been an expectation of a very large increase in terms of acreage for pulse crops in India. They're trying to institute different programs to initiate and expand pulse production in that country. They're trying to raise minimum price guarantees that they're offering farmers and different incentives to boost pulse production. There's a great concern in India these days, and especially in recent years, about food inflation. And that's evident as well in China and other parts of the world, where the cost of food is becoming quite problematic, especially in countries where there's still a very large and significant portion of the population that lives below the poverty line. It is a rapidly developing country, and the middle class is growing by leaps and bounds in countries like India and China, but still a significant portion of that population still has problem putting food on the table. So that incentive is in place to increase production, and last year was increased to new record levels in terms of pulse production. Acreage was expected to increase this year, but because of dry conditions going into this current season, acreage is probably going to be down about 5% on the pulses as we go into the winter growing season. How this evolves forward could have a significant impact both in terms of demand from Canada for pulse products from India, And India is always the key here. You know, it's always kind of one of those unusual and fickle markets for us that we're trying to learn and understand. Because they seem to move from a point of panic to a point of comfort in the marketplace in a relatively short span. And when India starts to make moves in the marketplace, especially in the pulse area, because they're the largest consumer and producer of the world, other countries tend to follow suit and follow in line with what the actions that India is taking. In the last week, you could see in the blue, they've had significant rainfall. So they were not in a scenario where it solved the problems that existed in the lead-up over the past couple of months, but we're certainly given a shot in the arm in terms of a rainfall just in the past week or two there. So the conditions of the India situation, to me, I don't think are dire at this point in time. However, they're going to be intently watched as we go through the immediate number of months ahead to see how this rabi crop is developing. And that's a significant portion of a lot of the lentils, peas, chickpeas, and such that are produced each year in that country. So you can see the graphic, large production last year. This year is going to be tailed off a bit, just 18.75 million tons, maybe 16.25 million is the expectation going forward for the current marketing year. Imports, again, large production last year. Currency-related issues, making it expensive to buy Canadian and other foreign product. Difficulty in acquiring credit. Those things have probably tailed off the expectations of what imports are going to be for the year ahead. The demand is always going to be there, certainly, but if conditions become tightened, then there's going to be a scenario of, maybe they just use less. And again, a lot of this has to do in the macroeconomic environment. I won't have time, unfortunately, to go through a lot of the conditions that exist out there, but we all understand European debt issues and difficulty of the U.S. to pull itself out of recession. All of these dynamics are at play in the grander context that are affecting demand for all commodities, whether they're in the ag sector or in the energy or in the metals. There's an ebb and flow that's going on that has created difficulties for some countries to necessarily import products as freely as maybe they'd like, because it's more difficult to get credit. And it's difficult to with the currency fluctuations that they're seeing. Here you can see the India rupee relative to the U.S. dollar cross. It's costing more rupees to buy each U.S. dollar. And it's moved up. There's been a currency fluctuation just in the past 6 months or less of maybe 15 to 20%. And this is an additional cost that's being faced on the Indian consumer side when they're looking to import product from somewhere else. And obviously the Canadian dollar has gone along with the U.S. dollar in tracking a similar process such as this. Now the Shana crop is their Dizzy. It's a Desi type chickpea crop, and that's what for instance, our yellow edible peas compete directly against in the India market. And back in September, we had a significant fall off in the Shana price. And that all had to do with the institution in India of different controls put in place to control food inflation. India was putting limits as to how long you could hold product at Indian ports and such. Trying to eliminate speculation in the food market domestically in that country. And we saw the Shana price drop off significantly. Well, I'll tell you, when that happened, I started selling yellow edible peas quite aggressively. And we were still looking at that time about $9 a bushel, certainly in Alberta, and around that level in Saskatchewan. I'm thinking at the time, this is a fantastic price. I'm not sure what's going on in our key market. Sell aggressively. And we did that pretty intently. However, our domestic market really didn't fall off all that much for some number of weeks later, where it started to move back a bit, but nothing of too significance. Nonetheless, watching the trends of that domestic market in India, to me, is something to be watched. And this Desi chickpea market, domestically in India, is something to be considered. Lately, the market is looking like it's moving off a bottom. Maybe it has to do with some of the weather conditions and such that potentially may threat this winter crop of pulses that are just now finished planting and in the ground and harvested sometime in the April-May type period. So that may provide some underlying supportive issue if the weather issues start to materialize and continue a threatening path. Yellow peas, cash price, basis Saskatchewan. Again, you see the spike that we saw in 2008, but relatively speaking, we're at certainly the second highest price levels in our industry's history here. And we've seen a bit of rollover that's taken place just over the short period of time. However, there is strong underlying support on the market. I think when we got into December, we tended to get into a lull into the demand product for the export market for our product. I'm 100% sold right now, but in terms of what the grower should do at this point, I think there should exercise a bit of patience at this point in time if you're looking to do any aggressive marketings going forward. I think as we view the Indian crop situation this winter, if threatening conditions materialize, I think there is the incidence of government business after a lull period may be coming in for smaller fits and starts as we go through the January, February, March period. I think a few premiums in the marketplace may start to materialize for us to start selling into. If it turns into a serious condition in India, well, then, the upside may start to really open up potentially. But at least at this point in time, with the staggered ability of the broader markets, whether it's in corn and soybeans and such, that are being influenced by the macroeconomics that are affecting demand for all commodities in a world that's still trying to pull itself out of recession and is a bit demand constrained, seems to me there's a bit of a limitation as to how aggressively the markets can move forward just yet. So look for opportunities to get us back to recent highs, I think, as we move into the later stages of the winter and maybe the next selling opportunity. Not a lot to say here in relation to green peas, operating at a premium relative to yellows, at a small premium, maybe 50 cents a bushel at this point. Yellows of $8 to $8.50 a bushel, greens in $8.50 to $9 a bushel. That's sort of the current environment we're operating in. That's sort of the quick wrap-up of what I was going to do on peas. When I start to do, though, the looking ahead to new crop, and I'm looking at cash bids probably that are being advertised in Saskatchewan of $6.75, $6.80 a bushel right now. Certainly nothing there that would be of attracting my interest at this point in time. I think the trade is being extraordinarily cautious about how they're approaching new crop right now. Maybe it's a bit of a fishing exercise at this point. But I believe that with the tightness of supply that we have on the Canadian side, I don't feel there's a need for growers to be taking any aggressive stance related to new crop. When I do I've just started my gross margin analysis of taking various cropping options we have out there using as a benchmark Sask Ag cost of production numbers for canola, for wheat, for peas, for barley, for oats and such, and looking at what some of the new crop pricing opportunities that exist out there. Peas to me rank, and I've used as a benchmark right now about 7.25 as a fall delivered price, ranks no better than mid-pack, maybe even just on the bottom side of the mid-pack grouping of commodities. Things like canola at $11 a bushel and malt barley at $5 or just better than that. Even wheat at, if we can contract a hard red spring #1 price at $7 a bushel. #1 durum at 7.25. Right now, those to me provide the greater economic incentive relative to peas, yellow peas at $7 or 7.25. So I think there's some work that needs to be done by the marketplace to attract the interest of growers from an economic point of view. Agronomics and rotation are always going to be the primary consideration for growers on what crop mix they put in, but the economic incentive in my mind is not necessarily there. But I look forward going forward into 2012, and I think there's a need to bring those prices up to a better level to get that interest going. So in that sense, I'm optimistic about the opportunity that we see on peas to deliver better prices, certainly on a new crop perspective, than the environment that we're seeing right now. So my opinion right now is to exercise some patience. And with that, I'm almost out of time, and I certainly appreciate your time here, and the very best of luck to you all in the future. Thank you.